Hi everyone, it's Thursday, January 30th. This is Lee McMahon with your daily video. Please take a minute to look over the risk disclaimer, which should now be on your screen, and then we are going to go to the charts. Alright, so today was about continuing reaction from yesterday's FOMC rate decision and also the RMBZ rate decision. Talked about both of those a little bit in today's morning digest, so take a look at that if you haven't yet. It's on the website, globalfxclub.com, under fundamental analysis. A couple things that we had today. We did have the U.S. quarterly GDP announcement, 3.2% actual against either 3.2 or 3.3% expected. So basically in line. They upgraded last quarter's growth up to over 4%. So some positive news there on the U.S. growth front. Unemployment claims higher than expected, 348,000 against 331,000 expected. Pending home sales worse than expected, 8.7%, negative 8.7% against 0.1% expected. New Zealand trade balance came in slightly smaller surplus than expected, 523 million to the positive versus 550 expected. That's the data that we had today. We also had Australian PPI numbers. Producer price index, so an inflation gauge that was actually much weaker than expected, 0.2% against 0.7% expected. So no real major alarms going off in terms of data. One of the strongest movers today was actually the euro. All right, the euro USD sold off today fairly aggressively, but is now testing some very significant support. I would be very cautious in this area about shorting. If you're already short, great, nice work. Maybe you got short up here, all right, and you managed to hold through this flag. I was expecting this flag to break higher. I had a long that got stopped out of break even. Now we're down here. So if you're short from here, great. Keep it at break even. If we go, great. I would not be initiating new shorts here, not just because of the ascending trend line and this retest that we're dealing with, but this 135 figure. All right, it's been kind of significant in the past. You can see we held it up around here. We held up around it back here, back here. All right, it would not surprise me in the least to see a breakdown of this 135 and then a very strong bounce higher as we trapped, all right, a bunch of weak shorts down here between basically 135.50 and 135. So just be cautious about chasing shorts down here and kind of wait and see. If we do get a daily, weekly close below 135, either tomorrow or next week, great. I think then we can start to pile in to some shorts with a little bit more confidence. But until we get that, I'd be cautious. Tomorrow we do have CPI estimates for the Eurozone as a whole. All right, 0.9% expected on that inflation number against 0.8% prior. We also have German retail sales. That is what it is. Sometimes it's significant. It's usually not that big of a deal. We also have the Euro-wide unemployment rate. That could be also very significant. I'm expecting it to stay the same at 12.1%. The other big news that we have tomorrow morning is Canadian GDP. I wrote a guest article that got published today on Daily FX about dollar CAD, warning that we may be seeing the end of not the end of the bull run by any means, but the end of this particular phase of it, and that we are somewhat due for a correction and really a stronger Canadian GDP. They're expecting it to be 0.2% against 0.3% prior. If we see 0.4, 0.5, that could really start to spark something significant here on the CAD. This level that we're at right now is basically a major 50% fib. It's actually a little bit higher, but generally a 50% fib, all right, from the 2009 highs above 130 to the 2011 lows below, I think, like 95 or something. So a very significant fib level. You can see here on the 4-hour chart, we do have some significant RSI divergence. Daily chart is overbought. All right, so a lot of just warning signs going out. If we do manage to basically break this ascending trend line, I think that would be a great start. We basically need a close between 111.50 for that to really start to get going. So keep that in mind. Maybe something to watch tomorrow with the GDP coming. The other Canadian dollar pair I'm looking at right now is Kiwi CAD. All right, we have a break here already. Possible head and shoulders with a very elevated neckline. 4-hour close, couple retests. This 100 period EMA here on the 4-hour chart obviously needs to give way on a closing basis. Targets are about 89.80, which is about the 200 period EMA. So keep an eye out on that one as well. It's another one to consider. We look at some of the other stuff that's going on. Take a look at pound dollar. Okay, pound also sold off today. Broke down out of this ascending trend line. This is another one though. Can't really chase it to the downside here. This 164 figure is pretty big. We have this ascending trend line with this 200 period EMA. So it's another one to watch. If we do smash, again, daily, weekly close below 164, maybe then we'll start to see some follow through to the downside. Aussie dollar broke out of its wedge, retested. Now we're heading higher. Major resistance comes in at about 88. Just call it 89. Above 89 needed. Maybe we can get up to as high as 92, 92.50. But we do need to get above first this current level we're testing about 88.20, and then about 89 is the next level of resistance there. Another Aussie pair that has been powering higher is Aussie Kiwi. It's trying to break out. Needs a 4-hour close above 108 to open up additional upside. One thing to say, all right, it looks like this is a little head and shoulders pattern here marking the bottom. What I would not be surprised to see, and would actually love to see, because I might actually trade it, I try not to trade this pair, is if this is a left shoulder, this head and shoulders is the head, and now we're going to put in a right shoulder here. All right, so basically keeping it below 108, between 108 and 106, basically 108 and 106.50 or so. All right, and then a strong breakout above 108 for a little bit of a correction. Aussie Kiwi has been rallying. The Kiwi has been stagnant to weak lately after the RBNZ rate decision. Why? They didn't hike rates. Most people did not expect them to hike rates. So there were a lot of strategists, including ANZ City, I think, HSBC, that came out expecting rate hikes. Swaps were pricing in a 30% chance of a rate hike. They didn't get it. That's fine, but what I think the disappointment was that they didn't get any sort of guidance about when hikes were coming. All right, we didn't hear the statement say, you know, all right, we didn't hike this time, but we're looking at March. Instead, they basically kept the same language: soon, exchange rates too high, etc. So I think the disappointment of no exit strategy made people think that maybe a rate hike is a little bit further off than we thought. With that said, though, in terms of Aussie Kiwi longer term fundamentally, pair is absolutely still a sell. New Zealand will normalize monetary policy well before Australia, barring some sort of financial meltdown in New Zealand, or barring some really, really surprisingly good numbers out of Australia and China. I think this pair is still destined for lower, but that doesn't mean you can't play a medium-term correction, especially with such an oversold pair. Eventually, you know, there's going to have to be a correction. Markets don't move in one direction forever. So that is Aussie Kiwi, something to keep an eye on. Let's do the yen pairs real quick. Dollar yen held this ascending trend line, all right, again, so very close together, 2 touches. We are failing a little bit here at the 618% fib. We do manage to get below basically 102 with a 4-hour close. All right, I like the yen pairs to continue their sell-off. The Nikkei is holding up pretty well, but it still looks bearish. It's still playing out this head and shoulders. We need to get below 14,750 is the support level. Below there opens up quite a bit of probably aggressive downside. And 15,500 is the 15,500 is the major resistance level. Shorts up and through that level are perfectly valid. So those are the new levels to watch on the Nikkei. I'm still biased to the downside. We need to see that 14,750 level give way sooner rather than later. All right, that's what I got for you today. I hope that was helpful. Good luck trading tomorrow. Enjoy your weekend, and I'll talk to you soon.